Stocks reacted well to the jobless claims number that came in at its lowest level since back in March of last year. The Dow Jones Industrial Average once again led the way. We ended at an all-time high for that blue chip index. We also saw some pretty good gains out of the S&P 500 that fell just shy of an all-time record. And we basically finished flat for the Russell 2000, up just a touch with the NASDAQ. So all in all, it was actually a pretty solid day where we closed well off the lows on all of our indices. We'll talk about all of that, see what it means for our posture. Then we'll get into a trade application example where I focused on a bullish swing trade that appears to be bouncing up and off of that rising 30-day moving average. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's May 6th, 2021. First of all, if you're new, welcome aboard. Remember to go over to YouTube, click subscribe on our channel, then go down to our description area and sign up for our email distribution list. We're also heavy users of Twitter. My handle is @BrandonVanZee, and if you haven't done so already, I would encourage you to follow me. We really appreciate those of you that help support this project by clicking like and retweet on these Market Outlook tweets as well. And then last but not least, we have a presence over on Facebook. Feel free to join our group at that web address you see in the logo in front of you. All right, let's go ahead and dive into today's activity. And as you can see, I've got our traditional chart 4B pulled up here in front of us. For those of you that are newer to this presentation, this is just a four grid that will show the four major U.S. equity indices, and the background colors of the charts will change depending upon whether you have a bullish or bearish posture using the market forecast technical indicator. Now, the market forecast technical indicator is this little indicator that you see down below on all four of these charts here, and they are exclusive to TD Ameritrade and Thinkorswim. Many of you know that David and I used to work for TD Ameritrade, so we use their products quite a bit, and this is one that is unique to them. So if you're a Fidelity customer or something else, Interactive Brokers or anybody else like that, you might not be able to access this information. But if you are a TD Ameritrade or a Thinkorswim member, you can at least pull up the market forecast technical indicator. Now, all these additional color changing options that we put together here are known as ThinkScript programming code, and that is unique to us at Market Scholars. And all of you that are premium members, our 3-year premium members, have access to all of the charts that you see David and I use. And there's about 50 plus of them. So what you see us use here in these presentations is just scratching the surface. But when you see a green background color like we have on the two top charts, that means that we have a bullish posture. In this case, a strongly bullish posture, because that shading of the green is a darker shade. An example of the lighter shade would be kind of down here. For example, back in late March for the Russell 2000, you can see that lighter green color. But we haven't seen much of that on the top two charts because those have been our leading indices here recently. This has been a market that has really benefited dividend and value investors. We had a lot of conversation about that both yesterday in my factor-based swing trading class and then also today in my question and answer session. This is the moment in time where a lot of my classes are hitting their stride right now. And a lot of it is a result of the market kind of pushing towards those blue chip types of companies, the ones that are oftentimes well regarded as mature dividend paying companies. And so this has been a fun time for me to be a teacher. It was interesting because I was associating with somebody else earlier today that seemed to be bemoaning the stock market and seemed like they were getting maybe a little emotional about it to a point where they were thinking, if maybe they should let somebody else manage their money for them. And it's just really strange to me to know that there is such a wide variety of feelings about the market right now, where we're on cloud 9 in pretty much all of my classes, including these presentations. I think we've done pretty well. If I go over here and look at our trades that we put on, yeah, we've only lost one trade that I put on here recently, and that's that bear call spread on IWM. That's the only one where we have any losses on it right now. All the rest of these are winning trades that we've had, and that goes with these factor-based swing trading trades that I've got up here for my other class, and then even on some of my other accounts that we're doing, our dividend growth investing class. we only have one trade that's underwater right now out of 15 to 20 stocks that we have on here, and my other two classes, we only have one loss out of. Actually, I take that back. Two losses right now out of 32 stocks in my top-down trend trading class, and nothing but winners in my options for long-term investors class. In fact, that particular Monday afternoon class, we haven't lost a single trade in over a year, which is kind of remarkable. Now, naturally, when we have a bull market, that helps quite a bit there. But the point that I'm trying to make is we've been handling this particular market era incredibly well in my classes. And if you are somebody that feels like you're just not hitting your stride and you feel like every decision you're making is the wrong decision, consider a reset and take a deep breath. Make sure that you're focusing on the strategies that are a good fit for your personality. Remember, not everybody has the type of patience required for one strategy and this, that, and the other thing. So there's a lot that goes into investing, but just know that this should not be the environment where you're throwing your hands up in the air and saying that you want to give up. That's at least my feeling about the situation. With the stock market at an all-time high, things should be going pretty well for most people. But naturally, there are corners of the market that are struggling a bit more. And so, if you've been focused on more like high-tech types of stocks, I think that's the area where a lot of people have been a bit more panicky here more recently. And you can kind of see that down below with the NASDAQ as well, right? We're looking at the Dow Jones up here, which, when a lot of people think about this, quote-unquote stock market, they think about the Dow Jones. We in the business are probably a little bit more interested in what's actually happening with the S&P 500, and we're still hanging in there just fine as well. But the world outside of finance kind of thinks about the Dow Jones as the stock market. And of course, when they see that the Dow Jones is at 34,500 at a new record, they just think everything is going swimmingly. You start breaking down the market a little bit more, and you'll know that there are some cracks in the sidewalk. And you can see here with the NASDAQ Composite, that's an example of those high-tech types of trades that are struggling a little bit more. And you can see that in the last week or so, the NASDAQ has gone from a record high here on 429 to giving back a pretty healthy chunk of those gains. I don't know if it's been like 5% or what, but we are trading below that moving average. However, one of the things I've been working with you guys on in these presentations here over the last week or so is the recognition of different candlesticks. And when I did the presentation on this day over here on the 29th, I was saying how this candle was a little bit made me a little bit hesitant, a little bit nervous, because it gave me the impression of a hanging man candle. And I said we wouldn't know for sure until the next day to get that confirmation. So when the market did fall that next day, we could look back and say, yes, indeed, that was a hanging man candle that was sitting up there at a resistance area. Remember, that was right around the same place where it topped out back here in mid-February as well. Well, fast forward to where we're at today, I'm actually a lot more encouraged by what we see out of today's candle on the NASDAQ. This one made me nervous. This one over here encourages me, and they look nearly identical. Notice they both have the head and the long lower shadow. This one could be identified as a potential hanging man candle. This one could be identified as a potential hammer. And a hammer would generally happen at a support zone. Now, charts get sloppy, so you never know when is the exact support and when is the exact resistance. But in this case, what kind of encourages me here is the fact that we caught a little bit of a bounce on the NASDAQ right at that same level from back here in mid-March, where we topped out. And many of you are aware of that technical analysis concept of old resistance becoming new support. And right here, we had kind of that topping out area. In fact, it was a little bit of a double top if you looked at those two candles back here at the beginning of March, and then again right here in the middle of March, had a bit of a double top right there. Eventually, we were able to get through it, but as is often the case, you don't just go up forever once you break out. You oftentimes do what's known as a breakout retest. And so we broke out above those levels, and then we pushed back down, and now we're retesting that previous breakout area there on the NASDAQ. So I actually kind of like the way that today's candle shaped up on the NASDAQ Composite. In fact, it was only up 0.37% today, but considering the circumstances, I think this was just as influential of a candle here as what we saw in the Dow Jones, which was up nearly 1% today and hit a new all-time high. So, those of you that have been struggling in those high-tech types of stocks, maybe today will be a little bit more of a comforting feel for you. We'll see where things take us. Obviously, we're in the heart of earnings season right now, and that does dictate a lot of the activity that you'll see take place within the market. And if you have a bunch of terrible earnings announcements, perhaps that changes the picture. But just from a technical analysis perspective, I do think that's an encouraging sign what we saw there on the NASDAQ composite today. And that's the first time I've been able to say that in the last week and a half. With the Russell 2000, I'd mentioned before, that's our only losing trade that I've put on in these presentations here recently. And we're losing just a little bit on that. It's not a big deal. And remember, when you have mostly bullish trades and you have one bearish trade, like it is the case with my paper money account right now, then this is almost like a sacrificial lamb in a way. It's kind of like, hey, I'm trying to balance things out a little bit, but if this trade gets run over when I'm trying to be bearish on one thing and all of my bullish trades do really well, then that was worth it in the end. So I'm not overly concerned about it. When it comes to the small caps. And I think that I've still got plenty of time to let it kind of just go sideways. Remember, that was I think it was a bear call spread. Let me just check that real quick again. I don't want to tell you the wrong thing. Yeah, it was a bear call spread, and this was on IWM, so it's a little different on the RUT, but this is the ETF that kind of tracks the RUT, and it was the 228, 230 call spread. And so we've got a little bit of room there with IWM currently trading at 222, where as long as it stays below 228, I should be in good shape. Another thing, I saw some of you tweeting about this today, so it's catching my eye now as well. Really happy to see Kellogg up 7%. That is an astonishing day for such a boring consumer staples company. Remember, that was kind of a unique trade that I presented to you guys where we sold the $50 put as a leap, and we've captured about 70% of our maximum gain out of that trade already, even though we were planning on being in it for over a year. So really happy to see Kellogg bursting higher today on their earnings announcement as well. So as it stands with after today's activity, again, we had a strong day, a strong showing led by the Dow once again. This has been a kind of a materials and energy driven rally we've been seeing here more recently. And so that kind of lends itself to like a blue chip index like the Dow more so than it might a high tech index like the NASDAQ. But I think there are signs that we could have a little bit of a stalling out in that downward move in the NASDAQ here, and we might even be able to push back above that rising moving average. Now, tomorrow is the first Friday of the month. Remember, we get another jobs number tomorrow, so stocks will react to whatever happens, in that case, and so we'll have to keep our eye on the ball there. But given that the rest of the market has been kind of behaving itself, I'm kind of thinking that the NASDAQ has a decent chance to kind of catch a little bit of a recovery here around these levels. And the Russell 2000 actually closed exactly flat today. I didn't mention that before. You can maybe see it with the candle here. You had actually a pretty decent push lower in the Russell 2000. In fact, if I'm not mistaken, that IWM bearish trade that I had on was actually profitable earlier today. But with the rally back to the highs of the day, it went back into the loss column there for the time being. But as it stands right now, you're basically just flatlining right there at the moving average. So you're kind of you're waiting further information, and a sideways move for me would be perfectly fine for that trade that we've got on. But that is another healthy sign when you see the bulls push way off the bottom of today's session on the Russell 2000 there. So all in all, I'm reasonably pleased with the behavior we saw out of the market today. Despite having the nice recoveries on an intraday basis, we do remain with those weekly bearish postures on the Russell 2000. You can see the green lines have been kind of rolling over down below and are out of the upper reversal zone, whereas the green lines on the two charts up at the top are still in the upper reversal zone, in fact, tilting higher on the Dow Jones Industrial Average. So strong, indeed, that we had an overbought cluster signal yesterday. But keep in mind what I've mentioned to you guys countless times over the years, from my perspective, the overbought clusters are not as effective in changing the trend as the oversold clusters. So I look at them with interest, but I don't really react too strongly once I see them. Whereas when I see oversold cluster signals, there I'm a little bit more aggressive in reacting with a reversion to the mean type of a mindset. But when I see these types of red dots show up, I just kind of recognize that, yeah, we're in a little bit of a hot market right now, but it doesn't necessarily have to ruin the trend. We have to remember we've got a very accommodative Fed that we're dealing with right now, and we've got an economy that is kind of unthawing or thawing out, I should say, unfreezing itself, and people are going back into the economy, spending money. I think that should help support the activity within the financial markets as well. But all in all, we've got kind of a mixed market there, I guess you could say, with two of our charts bullish, two of our charts bearish. But if I had to tilt one direction or the other, I'd say I'm a little bit more bullish at this moment in time because we closed well off of the session lows, even for our two bearish charts down at the bottom. Let's take a look at our three green arrows set up here next. And let's see, where is our three green arrows set up? It is chart 4D in this case. And as it stands here, we actually have some new information to share with you. The Dow Jones just went to a three green arrows status today, and that's the first time it's had that status since going back here to April 20th. So took a little bit of time off as the Dow basically tracked sideways for a couple of weeks there. But now we've had that nice upward tilt here in the last few sessions, and that's been enough to push that momentum-based indicator, the MACD histogram, back up into the positive territory. So that's new information. That looks like a pretty healthy chart. I get it. People don't get overly enthusiastic about a big blue chip index like the Dow, but that's a decent-looking chart that we're dealing with there right now. So if you're looking for trend trades, perhaps there's some opportunities out there. In fact, one stock that's in the Dow that has been doing pretty well recently is Caterpillar, right? Heavy equipment and machinery and that type of stuff has seemed to be working a bit better than some of the other areas out there. I also noticed that Goldman Sachs had a very nice day today as well. And so you can see breaking out to new highs on Goldman there. That's helping support the Dow. Remember, the Dow is a little bit funky because it is a price-based index, or a price-weighted index, I should say. And so a stock that, like Goldman Sachs, that's a $365 stock, is going to have more influence than it would in a market cap-weighted index like the S&P 500. So when you see Goldman and Caterpillar and some of those higher-priced Dow stocks do well, it's going to have a bigger influence on the overall Dow's results. And so we're in kind of a sweet spot for those types of companies right now. On the downside, you can see the NASDAQ and the Russell 2000 both have three red arrows right now, and that is new on the Russell 2000 as well. Now, I will say the same thing on the Russell 2000 as I told you guys back here, which is about 2 or 3 weeks ago, we got three green arrows on the on the Russell 2000. I said, don't get too excited about that. And the reason I said that, and I explained it at the time, was we got three green arrows, but the moving average was moving lower. Right? It's kind of rare. A lot of times you have three green arrows like over here with the moving average also green, and what that's telling you is you've got a three green arrow signal at a time when price is above a rising moving average. Well, this time around, I wasn't really buying it for the Russell 2000 because the moving average was going lower at a time when you got the three green arrow signal. Now, fast forward to where we're at today, we've got three red arrows, but I'm going to also encourage you not to get too pessimistic on the Russell 2000 right now for kind of the same reason, although it's the 180-degree difference of it. In other words, this time you've got three red arrows, but the moving average itself is now rising, and that's why the moving average is yellow. So this seems like a chops and slops sideways situation for the Russell 2000. I don't view either three red arrows or three green arrows to be particularly important at this moment in time because we don't have a strong trend in place. Whereas the three green arrows signal for the Dow Jones and, in this case, Goldman Sachs that I still have up here, I think that's a little bit more influential in that case. Let me pop on over to the internet here briefly. I always like to get an opportunity to say thank you to those of you that help support us with this project here called the Market Outlook video that many of you find on YouTube. Thank you so much to the 121 of you that clicked like for me last time around. You really stepped up to the plate. I tasked you with it, and you didn't disappoint. So thank you for that. As I mentioned regularly, anytime we're up and over 100, I've got no qualms with spending the time that it takes to do the videos. We get below 100, then I start questioning whether we're spending our time wisely or not. So keep up your end of the bargain. We'll be more than happy to keep up our end as well. So thank you to all of you that helped supported that there. Also, while we're over here, a reminder that tomorrow David will be teaching his very popular technical analysis class at 1 p.m. Eastern Time. So if you've ever wanted to be taught by a chartered market technician, that is your opportunity each and every Friday. Of course, those of you that are premium and plus members have access to that. Earlier today, I taught my question and answer session. That posting is now available on our calendar for those of you that are premium members that want to check that out. And David did his portfolio management class with ETFs earlier today. Some of the questions we reviewed in my class was, how do we utilize the 9 at 9 to help us with our trading? What do I think about Canadian National's business model? Some thoughts about our options for long-term investors strategies and whether we're willing to sell puts right in front of earnings or not. Also had a question about how often rebalancing should be done within some of these factor portfolios, in particular the momentum factor, and then also had a walk down memory lane, so to speak, as we looked for some elite dividend stocks back in the 1970s, and trying to match up whether they did well in an inflationary environment in case we get something similar here. Going forward. So if you're interested in my answers to those questions and you're a premium member, make sure you check out that content on our Trading Rooms tab up here. And then also, while we're over here, I'm going to show you a factor selector that we just put out earlier this week, and we had a lot of shakeup here. I mentioned before that the Dow is benefiting from old school value and dividend companies, and this graphic kind of helps support that notion. You can see that after taking a week off, value is back up in the top slot in terms of how we evaluate the different factors that are out there, and dividend yield is now number 2. On the downside are some of those momentum stocks, some of those high tech and Cathie Wood types of stocks that did so well last year have really stumbled here more recently. So momentum's had a little bit more of a difficult time here recently. So I thought that was kind of interesting. Also wanted to point out something on Twitter that I felt was worth sharing in this particular tweet right here. Said, sometimes selling right can be equally as satisfying as buying right. In this case, the class participants in my top-down trend trading class voted to sell Etsy just this Monday at $194.69. Earlier today when I took this screenshot, it was down 15% after their earnings announcement to $156, and you can see why I love my students. For those of you that aren't aware of how I go about my premium classes, David and I each teach 4 premium classes each week, in addition to each teaching a question and answer session for our premium members each week. But anyway, in our trading rooms, I bring trade ideas that I think are good setups to my students. And then we use collective intelligence gathering to have kind of a healthy debate on pros and cons, doing some research and analysis of our various companies that we're reviewing and our trade setups. And then we actually go to vote at the end of class to determine what moves we're making within our portfolio. And our brilliant students just on Monday decided to get out of Etsy at just the right time. And you can see that it was right here as it was kind of breaking down below its falling moving average. We were able to sell our 60 shares at $194.69. And at the time of the screenshot today, it was down here at $156. So in just like 3 or 4 days worth of time, we're talking about a $40 per share difference there. And on 60 shares, that's like a $2,400 decision that we made to get out of Etsy just before they laid an egg on this earnings announcement here. So a lot of times the press and the positivity around decisions we make in the market are, what did we buy? In this case, it was equally as important as to what sell decisions did we make. And I was really, really proud of the decision that we made there in that particular class. In fact, that reminded me that in this case, with our swing trading class that I teach, we also had a situation that was somewhat similar with Regis earlier today. They were announcing their earnings and the stock was down significantly. And I don't know why Looks like I got to put my little show trades icon on there. I was going to say, I thought those were on, but hang on just a second. They should show up. We sold this a while back. I don't know if it was last week or 2 weeks ago. But the point is we got out, at a time when, it was a healthy moment to get out as opposed to having the market force us out today. I'm not sure why those aren't coming up, but I think it was somewhere around this time period where we did sell that. In fact, I don't know if it's on here for whatever reason, but anyway, should be on here. Factor-based swing trading. Don't know why that's not coming up. Something might be off with the platform right now. But anyway, we were able to avoid this 15% haircut on Regis today as well. So I guess my point is, remember that buying is only one half of the scenario. It's only one half of the equation. You also have to learn to be good at selling. And selling for, technical reasons or fundamental reasons, there are a variety of reasons of why you might decide to sell. There are other classes that I teach long-term investing where we choose not to sell, like in my dividend classes. But if that's something that you've struggled with in the past where you felt you've done a pretty good job of selecting stocks to buy, you've just struggled with selling those stocks, then that's where hopefully David and I can help you guys out with those decisions in our various classes there. Let's go ahead and do some 12 grid analysis here. Let's come on over here to 5A, and this is our asset class 12 grid. So as we're looking at this here, you can see that we've got a couple of pink charts to worry about here. In this case, we've got a dark pink in the middle, and that is foreign bonds. We also have a dark pink in the lower right, and that is U.S. Treasury yields. Now remember, we have a bullish trade going on right now on TLT. And so that doesn't bother me that TNX has a dark pink background color there. Remember, yields work inversely to bond prices. And so a bullish trade on bond prices equates to a bearish trade on yields. And so as this continues to suffer here, I continue to be pleased with that type of behavior. And I do want to remind you what I mentioned earlier when we were placing that trade. I don't have some sort of a long-term bullish view on TLT or bond prices in general. In fact, it's the opposite. I have a bearish long-term view on them. It's just that at this exact moment in time, I think that they had an opportunity to kind of stabilize after a long push lower in bond prices. And so far so good on that trade idea. You can see that bond prices have been supported and have been bouncing a little bit higher. At the same time, that yields have been kind of rolling over here. So it'll be interesting to see what happens if we roll over for a few more days, because the lowest that yields got in this move here along the way was on April 15th. So if we push below that, it does make me wonder if we've got some sort of a more cascading type of event to the downside. And then likewise over here, you'll notice that the highest we got on TLT was on the 15th of April as well. So if we got above this candle here, who knows, maybe we've got some action to the upside there on long-term bonds as well. Foreign bonds have just largely been tracking sideways. You can see that they're trading below their falling moving average, so it does make them a bit more different than what we see here with bonds in the United States at this moment in time. We've been talking a lot about the US dollar as well. You can see the dollar struggled here today. Now, we do have a light green background color, and so that tells us that we do have a weekly bullish posture on the dollar, but with the moving average tilted lower and being red, I still think that this one is kind of in a bit of a danger zone here, and it makes me wonder, with these oversold cluster signals that we got on the dollar about a week ago, if this was all we were going to get out of that reversion to the mean move. Remember, when we get these signals, it does not require that we actually have a trend-changing event. It basically means that whatever move got us into that condition, in other words, when we went from this red dot down to this green dot, the selling was too extreme to keep up at that pace. And so a lot of times you see some sort of a reversion to the mean, and we did see that over the past week. But today we rolled over again. And so this very well might be a situation where we resume our downtrend in the US dollar going forward. And, for what it's worth, I don't mind that. Everybody else, has to make that decision for themselves. But I kind of like an environment where the dollar is weakening because it helps support commodity-related securities. It helps support foreign stocks, ADRs, and it helps support international U.S. companies like your Procter and your Gamble's and your Coca-Colas and those types of companies that do more business outside of the U.S. than inside of the U.S. The falling U.S. dollar will support those businesses. So I tend to work better myself with the style of trading and investing that I do when we have a falling dollar environment. So if that's what is meant to be in the future, then so be it. I'll be happy to see it. But we are kind of back in that area with the dollar where you could end up having a little bit of a tug of war between bulls and bears right here, because this has been kind of a magnet area for the last, let's call it 2 or 3 weeks. One area that really surprised me today was the metals. Take a look at gold here. That was a beautiful move in gold to the upside. Remember, we do have a gold mining trade going on right now with Gold Fields. Haven't done all that well with it, but we are at least in the positive territory with that trade. You probably would have been better served just to buy gold outright in the form of GLD. Nonetheless, maybe the miners will start making a move here again soon enough. But this is shaping up into be a really nice looking chart here. And remember, this was the one that we've been talking about since the beginning of March, where we were biding our time, and then it was this double bottom here on GLD that caught my attention. And once we got above that moving average, that was the time when I was finally willing to break down and say, let's do some bullish trades on gold. Because I'm a guy who actually likes gold investments. I need to push the keyboard away from myself when the charts are not looking very good, and that was the case back here. Now that this is firming up again, you might have some very interesting opportunities within some of those gold mining stocks that are out there, particularly in this environment. Remember what I talked about on Tuesday from a sector perspective. The material stocks have been just absolutely, slam dunk material here recently. We talked about Nucor steel on Tuesday. And so, remember that the gold mining companies are a little bit different than a lot of the other materials because, sometimes they are, a risk off type of a mindset. Sometimes money drifts to gold when they want to remove themselves from other riskier situations. And that doesn't really align with a lot of the other kind of more cyclical materials companies out there. Nonetheless, if you were to buy something like an XLB, which is an ETF that tracks the materials sector, remember there are gold mining stocks in there. So just from that concept of, hey, materials are strong right now, you might have an added benefit for those gold mining companies, and then you team that up with the knowledge that the gold chart itself is actually turning around here, an actual potential trend change taking place. You could have some further upside potential in some of those gold mining stocks there. Let's go over and look at some of the commodities 12 grid now. I wanted to see if the other metals were kind of firming up today, because I think I spotted that on CNBC earlier, and that is indeed the case. This middle rung here on chart 5K, this is our commodities 12 grid. These will be our metals. And you can see here that gold is one that we look at religiously as part of our asset classes, but these other metals, they don't get the attention that gold does, but nonetheless worth pointing out that they are starting to take off as well. Silver had a very nice day. We were up over 3% on silver. Platinum was up 2.5%. And then copper has really been taking off here lately. Copper was up about 2% today, but you can see this move off this moving average has been really strong ever since the middle of April. So what we've been seeing is copper going up at the same time we've seen things like lumber going up. That's been in the news a lot. You can also see down below corn has been going crazy to the upside as well. And we also have coffee making a big move down below here as well. So this is an environment where most of our commodities are doing well. The exception of that looks like it's cocoa, but otherwise we are in kind of a more inflationary type of an environment right now. And that kind of matches up very well with what we were reviewing on Tuesday together when we were looking at some sector analysis, and I was mentioning how energy was leading. Remember, energy stocks are hitched to oil prices. And then I said that, materials companies had gone all the way up to number 3 on the sector selector. And, all the rest of these commodities will do well with the materials space. So that's the mode that we're in right now. This kind of nervous mode that, we've done a lot of money printing, a lot of pumping by the Fed to the point where asset prices are getting quite inflated. And that is working its way into commodities, which then works its way into the real economy. Remember, with lumber prices up so much, it's actually adding, I think they said like $36,000 to the average cost of a new home, just simply because of the rising lumber prices here more recently. So these do have real world consequences that we're dealing with here. And there are ways to play it through the stock market, as I mentioned before, with like the gold mining companies and different things like that. So anyway, interesting times that we are going through right now, where the big blue chip winners out there and the inflation plays are doing quite well. At the same time, there are people in absolute pain right now in certain areas of the growth areas, like the high tech areas of the market as well. Let's get into our trade application example. And for that, it was a simple bullish swing trade. Some of you might have spotted it when I showed you the monitor tab here earlier, but in case you didn't, it was Dana Corp. And remember, I've already done this trade, sent it out via Telegram alert, as I always do, to our premium members. It's another benefit they get, is to learn this information in real time, as opposed to everybody else that watches the free YouTube video not learning about it until that night, and then they have to wait until the next day to place their trade. Now, sometimes that's a better deal, because sometimes stocks go the opposite direction. But in other cases, like today, where we closed at the high of the session, of course, if you had bought this stock anytime throughout the regular session, you're happy that you got at least some profit on your hands when it closes at the high of the day, which this one happened to do here today. So what caught my eye with it is just the fact that we've had, this nice pullback from the high that this one printed here. And remember, this high was higher than this high. So we had a higher high followed by a higher low. So, you have a low down here at about 20. Another low down here about 22, and ideally this next one right here that hit 2 days ago at about 25 will be yet another higher low, and the hope is that we eventually get a higher high. And if that's the case, then this will hopefully end up being a winning trade, as long as it doesn't have a quick correction before doing so. So why it caught my eye here today in particular is because yesterday and the day before it was trading below its moving average. With today's move, it got above its rising moving average, which is why that moving average turned green here. And the hope is that it will continue to push up towards my price target that you can see up here. And I put my stop loss a little bit below the candle from a couple of days ago in that particular case. You can see that the blue line is jutting higher here in the case of the market forecast technical indicator. And that is the line that we use for swing trading purposes. Remember, the green line is what you would use for trend trading purposes. If you're a swing trader trying to find the bounces, as is the case with this particular trade, then you might be better served by using the near-term line there. So anyway, it was a simple stock purchase trade where the hope is that this bounce will lead to a little bit of a further activity. And as we push towards these previous highs, we would be willing to take our profits along the way. This is a one-for-one reward-risk relationship that we're using in this case. Okay, so that's what I had for you here today. If you got value out of my analysis here today, whether it was with this trade idea or whether it was the knowledge of what's happening across the commodity markets, particularly the metals, or your understanding of, it's equally as important to learn how to buy right and sell right, or whether it's the knowledge that blue chips are outperforming the high-tech growth areas, or if you just like the fact that I get the videos done somewhat early and before the markets open the next day. Whatever your reason, I do appreciate you guys clicking like there for me. It helps support the project. Thank you so much. David should be back with you here with tomorrow's video, and I'll see y'all on Tuesday of next week. Take care, everybody. Bye-bye.